it seems as though sometimes it's almost serendipitous, but not in terms of how technology gets adopted and by who and by when, and it's really just an opportunity. So it sounds like an opportunity for them. It sounds like a challenge, though, for the traditional Western system, because they want to regulate it. The Gensler at the SEC wants to regulate it. They want to put any sort of derivative market around the cryptos within the scope of the CFTC. And Rostin Benham, whom we know was purposely limiting the prices of silver commodity last year during silver squeeze, he admitted it at Voca. So the government wants to place the private cryptos within the regulatory sphere. And it'll be interesting to see how that affects the adoption and uptake of some of the crypto complex here in the U.S. Do you have any concerns over that? Do you think that's going to be an issue, or do you think that the government doesn't have the right policy tools really to do that?
So the government does to a degree. I think more than anything, I wouldn't blame the government so much as I would blame the culture in the West generally. I mean, everybody's super. I remember in 2017 when CME Group and CBOE announced that they were going to be, creating a financial product around futures trading of Bitcoin at the time. And everybody was super bullish on this. And I wrote a short article. It's probably not public anywhere anymore, but I wrote basically saying like, this is the death of Bitcoin right here, because if you're trading paper Bitcoin, well, you're a silver guy, like if we treat Bitcoin as just that, and it's this asymmetric store of value, and then everybody's just trading derivatives and creating all these weird wrapped financial instruments around it, and it never breaks out of being just a piece of collateral for other financial tools to be built upon, then
Hey everybody, this is Rob Keynes at goldsilverpros.com. It is May 19th, 2022. We're going to date that just in case we talk about prices in the market. I am joined by a returning guest. It is Kurt Wuckert, the chief Bitcoin historian at CoinGeek. Sorry guys, I have allergies, so my pronunciation is not going to be great today. But I asked him back on the channel. We originally talked maybe 7 or 8 months ago, but I asked him back on to talk about the crypto space with regards to what's going on in the world, the sell-off in the general markets. And also, we're going to talk stable coins, and we're going to talk about Bitcoin and how it's implemented, all sorts of things. Since he's the chief historian at CoinGeek, he knows a lot about it. He tours around the world, and I think he's going to Dubai pretty soon, aren't you, Kurt?
Absolutely. I'll be speaking at the Global Blockchain Convention in Dubai from May 24th to the 26th, doing a bunch of stuff out there. The Muslim world is a really interesting place when it comes to technology in general, but very specifically financial technology and money in general. Like the way that they handle banking is very specific. If you look into Sharia banking, it's a fascinating concept, the way that they think about debt and investment and all that kind of stuff. So they've been really open to interesting ideas about Bitcoin because they see the rest of the world as generally irresponsible and that kind of thing. They look at our debt-based sort of Keynesian economies as not just silly, but immoral in a lot of ways. And so they're very ripe fruit, basically, for giving them the Bitcoin black pill and getting them to move a new direction. Like, you talk about fixed supply and global auditability and that kind of thing, and they're just instantly like, oh, like that makes a ton of sense. It's fantastic. Why didn't anybody tell us? And so
I think historically that culture, specifically the religion, really forbids the use of interest rates or doesn't like the use of interest rates because they see any interest rate on money as being usury, essentially, and that there needs to be, because over time you've got the compounding effect, and of course, who does that enrich? It enriches the lenders. And I think that has manifested in a lot of ways geopolitically between the U.S. and its Middle Eastern counterparts. And we could go on and talk about that. I don't want to go too deep into that, but a lot of the differences in culture, religion, and the views on money I think are really playing into the changing relationships around the world in regards to the Middle East. And I think it's cool that you're going there to talk about Bitcoin. So if you would just elaborate maybe on a point, what is one specific thing that they see different that we do in which Bitcoin sort of helps them out?
So, like you said,
Hmm.
lending being usury, the toleration for that a decade ago
Hmm.
was essentially zero. Now that has changed a bit. Like there's a lot more progressive view in regards to investment, like treating
Hmm.
debt as an investment, essentially. So, the way that a reasonable business person would in the West and say, well, if I take a low interest loan and start a business, the cash flow is like, this is a good thing. Culturally, they're not going to be everybody has a credit card and everybody's got carrying $50,000 in debt and that kind of thing. Like that is not where they're at. But from a business standpoint, they see that value again in global auditability and sound money and being able to uh, take a very principled approach to money, which Bitcoin is. Bitcoin is nothing if not a rules
Hmm.
enforcement mechanism for both supply and where is that supply held? Can anybody lie to us trivially using Bitcoin? And the fact is no. So they're very excited about not just even the monetary stuff. They're also very keen on taking a good attempt at leapfrogging some legacy technologies that we're in the West. We bear ACH and wire
Hmm.
payments and Swift, and some of these things were built in the
Yeah.
1970s, and they don't have those problems. They were the UAE even was a barren desert even in the early 90s, and so they don't have any of that technical debt coming into it. And so they're looking at saying, okay, Bitcoin's been around for more than 10 years now, and a lot of people have worked out a lot of the kinks, and they're really excited about some of the more progressive technology stuff too. So when we're talking about Web3 and
Hmm.
digital identity and being able to secure property rights and titles and all of that stuff using the cryptographic tools and keys as an attestation of ownership, they're just like, hey, why wouldn't we just integrate this new thing? Because we don't have a reason. Like we don't have to have a 10-year deprecation cycle on whatever old financial tools they were using, and it works really easily there because it's uh, essentially a series of royal families that can kind of just make an absolute decision. Like if they see the value and say, okay, I don't have a better pitch, it's literally okay, policy tomorrow, and let's get the
Hmm.
implementation stuff going. And so there's a real big opportunity there, and we're explaining to them exactly that. Here's how you can leapfrog all of these other problems we've been dealing with for 20 or 30 years and start as a new beacon to basically show the rest of the world what they should be doing with
Yeah, it's
Bitcoin too.
interesting you say that. It seems as though sometimes it's almost serendipitous, but not in terms of how technology gets adopted and by who and by when, and it's really just an opportunity. So it sounds like an opportunity for them. It sounds like a challenge, though, for the traditional Western system because they want to regulate it. The Gensler
Mm-hmm.
at the SEC wants to regulate it. They want to put any sort of derivative market around the cryptos within the scope of the CFTC. And Rostin
Yeah.
Benham, whom we know was purposely limiting the prices of silver commodity last year during silver squeeze, he admitted it
Mm-hmm.
at 𝙁𝙁𝙁𝙁. So the government wants to place the private cryptos within the regulatory sphere. And it'll be interesting to see how that affects the adoption
Mm-hmm.
and uptake of some of the crypto complex here in the U.S. Do you have any
Sure.
concerns over that? Do you think that's going to be an issue, or do you think that the government doesn't have the right policy tools really to do that?
So the government does to a degree. I think more than anything, I wouldn't blame the government so much as I
Mm.
would blame the culture in the West generally. I mean, everybody's super. I remember in 2017 when CME Group and CBOE announced that they were going to be, creating a financial product around
Hmm.
futures trading of Bitcoin at the time. And everybody was super bullish on this. And I wrote a short article. It's probably not public anywhere anymore, but I wrote basically saying like, this is the
Right.
death of Bitcoin right here. Because if you're trading paper Bitcoin, well,
Hmm.
you're a silver guy. Like if we treat Bitcoin as just that, and it's this asymmetric store value, and then everybody's just trading derivatives and creating all these weird wrapped financial instruments around it, and it never breaks out of being just a piece of collateral for other financial
Yeah.
tools to be built upon, then
Right.
we've already lost. Like Bitcoin was not intended to require something like an ETF or
Right.
the um, what do you call it? I always
They're
forget
financializing it
stock
essentially,
that,
aren't they, Kurt? So they can bring it within their existing regime. If they can financialize
yeah,
it, they can regulate, manipulate it, just like they do other financialized products.
exactly. You know, and so you see who loves that, like the people that have invested in all the
Mm-hmm.
companies that make this happen, like their MasterCard, it's New York Life, it's
Mm-hmm.
CME Ventures, it's AXA Insurance Ventures, it's all these different companies that look at it and say, oh, okay, here's a new thing that we can pull its strings and manipulate it, and we'll make all the influencers super rich,
Yeah.
so they'll be on our side anyways. And that's what it's become. And now, you know, Bitcoin was a disruptive
Mm-hmm.
payments technology, but also like an ownership
Yeah.
and identity protocol and all these other things, and like should have put all these weird payments companies out of business. But now when you go to like the Bitcoin 2022 convention, it's welcome to Bitcoin 2022, brought to you by
Right.
Cash App. And it's like, God, good grief! You know, this is like being being a slave on the land your father conquered. You know, and like it's really bad. And so I think going to the Middle East specifically,
Mm-hmm.
and them looking at it and saying, well, we really don't like derivatives and all this paper
Right.
trading and all this stuff. Like we think it's
Mm-hmm.
frankly immoral, but they immediately see the disruptive nature of the technology itself. The funny thing is going to be when they have a more competitive economy than ours, because we can't all just be traders, right?
Right.
You know, like if they're using these things to reduce the friction of their real economies there, you know, everything from salaries to title
Mm-hmm.
transfer and all these other things that are just, you know, there's no friction anymore on these things. They're able to focus on their real work, while we're all just, oh, I don't know, I've got some DeFi thing, I've got all my tokens, I've got a bunch of computers just making me
Mm-hmm.
money for no reason. Like that's all nonsense. And like, I think that's the kind of thing that we'll see, is the West ceasing to be competitive as real economic actors, while other countries are working toward becoming truly productive economies. And that's I mean, as an American, it bums me out, but you know, at the same time, I'm just happy to talk to anybody who wants to talk about real economic progress and building real businesses and moving forward with that. So if those are my allies,
Yeah,
that
you're gonna have to
I'll
get them
take
wherever
them.
you get them, because when the money powers in the government comes out, and they're what I call their bulldogs, the government who answers to the money powers comes after it.
Mm-hmm.
You know, they're going to try to
Yeah.
regulate it. And I want to tie that to, because we do a lot of traditional macroeconomic discussion on our channel. I wanted to tie it to like the Belt and Road Initiative, because there's a movement not only in digital currencies, smart contracts, payment systems outside of those 70 things that emerged in the 70s that you talked about outside of SWIFT, from China, from Russia, from the Middle East, from other places in the world. Even Europe is jumping in now, because from an energy perspective, they need to do trade with those other entities in the BRIC. And so they're signed up. Even
Mm-hmm.
London is helping to finance some of the Belt and Road initiatives. So they're getting into it. There is a pivot going on. And how do you think smart contracts, the blockchain, and these digital cryptos are going to play into sort of that shift in the world, saying this system is 50, or actually in a lot of respects 150 years old, we need to move away from it? And what does
Yeah.
that do to the Western system ultimately? Is that the thing that's sort of the nail in the coffin for what we've all been talking about? We know the system's dying, you know.
Right. It's hard to know. I mean, we've seen if I had been alive in the 70s, I would have been that guy, you know, criticizing the
Right.
end of Bretton Woods and all of these other things too. You know, like, wow, this is it. The dollar's over. We're all, you know, but now we're 50
Yeah.
years beyond it, and well, the dollar's still there, and you know, a lot of people made a lot of money still
Yeah.
using dollars. And I've been bearish on the dollar for, you know, as long as I've been basically an adult, or even less than an adult. I was a late teenager and letting my friends know, like, you realize this whole economy's fake, right? But at some point, you know, it doesn't matter. You kind of have to play in the
Right.
system. If there's money being made, you gotta survive it. You gotta do something, and you have to earn and survive, but
Yeah.
educate people. And I think the one good thing that Bitcoin has done is it's incentivized an economic education, at least a little bit, to get people to look into, well, you know, what is hard money? What is sound money? What do these things even mean? And so there's a little nugget of goodness that's come out of people getting a little bit of a financial education there. But I think the history of things, the few times that it's looked like the economy is going to collapse, there's just another rabbit that comes out of the hat. And like, it's so that makes it really hard to predict, like, what will London and New York and these other places do? Like that, I don't know what cards they have up their sleeve to solve whatever this next thing is going to be, but it sure feels like we're cascading the wrong direction. It feels like the negatives in the global economy are accelerating, given inflation and prices and lowered productivity and all kinds of other things. Like, but I mean, I live in Florida, which is a state that, as soon as California started rejecting ships coming in and all this stuff, the governor of Florida started to say, hey, if you're willing to go down the Panama Canal, we'll take your business. And, I think long term, if we were to look 50 years in the future, I think we have a little bit of a balkanization that happens. I think we see the EU go away. I think we see more of like what we saw with the UK leaving the EU. I think we'll probably start to see that with American states even. I think Texas and California and maybe even Florida will start to say, why are we bearing the weight of a lot of these other states that we don't share their values, and they're causing us economic problems. And so I think we'll see a little bit of a balkanization. But ultimately it's been a bad idea to bet against the central bankers for 300 or 400 years now. So it's tough. You have to say, like, how far away are we from the mean, and when do we actually start to adjust back toward it? And that's a real tough conversation. Bitcoin's a big variable there, but I think the mainstream money power broker types have done a very good job at keeping Bitcoin in a very small box. Keep it, hey, let's celebrate when a new derivative launches at some exchange somewhere. That's a victory, right? And I'm always the guy saying, hey, this is, you're letting one more camel nose under the tent or whatever here. And at some point, none of the good people are in the tent anymore. You've all been pushed out by the villains here. So, man, I don't know. The very broad macroeconomic stuff, I am very bearish on Western debt-driven economies generally, but I'm 36 years old now. I don't know if it collapses in the next year or in the next 50 years, but
I think from a milestone perspective, just the emergence of some of these digital technologies, the emergence of the Belt and Road Initiative, the Russia-Ukraine are really just symptoms of people reacting to that. So I do think we're along that path, and I've given up picking specific dates, because what's the point? I mean, what we're talking about are hundreds of years cycles, so it doesn't matter a specific date. What it really matters is the path that we're on. So I do think there's a lot of signs it's moving, maybe moving glacially to some of us that in our world study this for 10 years and like, okay, I'm ready for this to happen, or I know it's going to happen. But at the end of the day, things move in not only nation state cycles, but global cycles now. So it's going to take time, I think. One thing that I wanted to turn attention to, Kurt, and one of the real reasons I had you here is, one of the concerns I've always had with Bitcoin is how many transactions they can do reliably, and what the cost of those will be. You look at like Ethereum and its gas charges, you look at Bitcoin, and the uptake into real commerce is difficult because you can overload it very quickly. So I said, well, you're probably going to need a federated system, and you they're building that with the central bank digital currencies, the state currencies. But there's always an issue I've had with Bitcoin. And it seems as though the development group that does most of the development, or the groups, have really focused on almost making this a tool. I mean, I came out and said it a few years ago in an article. I think it's perfect for central banking, because what they're doing is they're forcing people into money pools, especially in the Lightning Network. They're forcing people into money pools, and that's transactions. And what are they going to do? They're going to charge for transactions. What is that? It's traditional banking. And so I said the Lightning Network, as currently implemented, and Bitcoin is currently implemented, is like a commercial banker's wet dream. But there are alternatives. You've talked about Bitcoin SV. I know there's Cash. There's other cryptos that are exploring not doing those types of things. But can you educate us a little bit about that, some of the advantages and disadvantages of the way that Bitcoin's been implemented?
For sure. So Bitcoin, I like to define the terms first. Bitcoin, Satoshi Nakamoto, the creator of Bitcoin, used the word Bitcoin to describe too many things, actually. So it's the name of the network, it's the name of the unit of account on the network, and it's also the name of the protocol. that implements the network. So it's like when Satoshi says Bitcoin, or when I say Bitcoin, it really needs to sort of be qualified. And so when most people hear Bitcoin, they think of the money that is represented by the ticker symbol BTC. It's worth about 30 grand today. But that is itself a derivative of the original Bitcoin protocol. When I talk about Bitcoin, I'm typically talking about the base protocol of what it is, what it does. And Bitcoin, the protocol, really is just a payments protocol that creates a network, and then that network creates a database. And that database is called a blockchain. What a blockchain is it's a forward-only, write once, read many, but it only goes forward. You can't go back. And that's the beauty of it. That's the most simple definition of a Bitcoin that I can come up with. But the interesting thing is that in BTC, this reference implementation that people think of as Bitcoin, they have made all kinds of decisions. And by they, I mean development communities, and then ultimately the people that run the culture, I guess, of Bitcoin, have decided that they want to limit the network's capacity to 6 megabytes per hour of data. And what that translates to is roughly 7 transactions a second at its peak. And that assumes everything's perfect. It's actually a little more like 4. And and under pressure, you know, like we've seen it get to 7, and at 7, you know, you don't know if your transaction worked. You may not find out for days if your transaction actually settled anywhere. But you're absolutely right that it has been sort of pushed in the direction of requiring a custodial model. Like, it makes sense to, okay, keep your Bitcoin in an account, and then it'll earn a little bit of interest, and just use a debit card, and you can swipe against your Bitcoin holdings. And ultimately they see it as like a treasury asset. And you're exactly right. That is, of course, what the banks would want you to do with your Bitcoin. And so it's funny because the culture is so anachronistic that they see themselves as be your own bank, very specifically being anti-bank, anti-federal bank, anti-commercial bank even. But at the same time, the development path has moved it toward, I think to call it a banker's wet dream is absolutely accurate. I think that's the best way to put it. But the protocol is actually, it's probably the most efficient broadcast payments technology on earth. It's exponentially more effective and fast and cheap than PayPal or Venmo or Cash App or any of these
wires
things.
Or any traditional banking.
Or what? Right. I mean, wire and ACH, right? Days for settlement and that kind of thing. And like, that's the beauty of it. It is a micropayments technology. And that has been re-implemented in Bitcoin SV, the BSV ticker. And then to a lesser degree, Bitcoin Cash, the BCH ticker, and some of these other things. But a lot of these, a lot of the blockchains out there really are, they're not used for anything. Like Bitcoin Cash has about 30 times more capacity than BTC. But it, on average, has smaller blocks. Its blocks are in the kilobytes. So every 10 minutes, there's like a few hundred transactions going across it. Now, there's actually more than that on BTC right now. So Bitcoin Cash calling itself like the solution or all these things, like, it's not really a good example. On BSV, now we have gigabyte blocks. We've had blocks that have 2.5 million transactions in them. And, you know, so these are people making very simple payments to each other. Some of it are in-game, sort of like video game payments and these kind of things, like pay to play, play per turn, or pay per turn, that kind of thing. And so there's a lot more utility there as sort of a proof of concept. But these are actual payments happening across the network that help you see, okay, that's about 4,000 transactions a second. And, you know, which is itself about 1,000 times more than what BTC is capable of. And it's not quite Visa. Visa's capable of probably 50,000 a second on, you know, Black Friday. You see how many transactions exist. So we have seen it in a testing environment. BSV is capable of 50 or 100,000 transactions a second, which is sufficient for Black Friday level payments. Now, the beauty of it is also building something in the stack. Like, what is a CBDC, a central bank digital currency? It's a token. It is a token that represents some other thing. So a token can represent $1 or €1 or whatever, and that needs to run in the stack of another network, because we don't want them to be separate networks, because otherwise the EU will have a blockchain and the US will have a blockchain and China will have a blockchain, and that makes makes money more difficult to use. So what makes sense is for everybody to basically pick the one network that they can all have separate tokens that operate in the same network. Right. Like we think of the internet today, for example, right? Like I don't go to a different internet to use Netflix than I do for, checking my email. It's all just one network, and that's what makes sense for us. And so there's a lot of other projects that claim to be trying to solve these problems. Bitcoin Cash is a good example. So are things like Solana. Ethereum claims that it's going to solve everything in the universe. And
right, they do.
They just really aren't, though. Like they can't scale. These things are designed in such a way that bring in a lot of venture money, and then they bring in a lot of retail money, and they bring in, but what is Ethereum capable of? 15 transactions a second globally. And if anybody's tried to mint an NFT or create a DeFi wallet, you better hope you've got $500 of ETH just to burn, just to even see what it's like to use the technology, because it can't scale and the network has bottlenecks everywhere. And if you hit one of those bottlenecks and, maybe you're in a position where, oh, shoot, I need to settle this trade that I've already initiated, and you were going to make $500 on the trade, but the gas fee to settle the trade is $800. So you have lost $300, even though you did a really good job with the trade itself. And so a lot of these networks really aren't examples of other things that can work. There's lip service paid to it, but the real value to most of these people is pump the token. Tell them Ethereum's going to be great in 3 years, and they're going to really regret not buying it now. And that brings in the fools, and that brings in liquidity. And then the people that front ran everything, founders and the old guard, that's when they start cashing out. That's when, you go buy your $50 million mansion and say, hey, I don't know, I was a co-founder of Ethereum. Isn't that great? And, retail lost money, and that all sucks.
When you travel around, Kurt, and you talk about the technology, and you also help, maybe you're also help people with integrations, or at least understand, what that would be. Do you talk about these differences? And if so, do you think it's sinking in and people are understanding? Because when people talk about crypto in the financial media, it's crypto, and it's very difficult to get a good discussion that goes into all of the different nuances. Are people getting that?
A little bit. I definitely spark curiosity in people. And the interesting thing is, going to this convention, for example, I stood outside of the Miami Bitcoin 2022 convention for 6 or 7 hours interviewing people on the street. And, you talk to each of them and they're, oh, this is so exciting. It's so disruptive. And I'm like, yeah, do you have a Bitcoin wallet? When was the last time you made a transaction? And they're, I have a Gemini account, or and like it just, to them, it's just, I don't know, I have my bank connected to a thing and I made money. And you actually ask them if they use the tools, and almost everybody says no. But then when you actually talk to the people, let's say you tried to mint a Bored Ape on Ethereum 2 or 3 weeks ago, and it was $1,000 a piece to mint your ape. And then, granted, some of this stuff will go up to, you have JPEGs that are worth $250,000 and you feel like a genius, but like that's such a small number of people. But then you do get the normal-ish people who, when they first attempt to do it and say, wait, that can't be right. I'm not gonna spend $500 just to see if this thing works. So I'm gonna do some more research here. When I meet those people and I tell them, like, no, that was right, that's really what it was quoting you, that you weren't doing anything wrong, the network is just like that. Then they start to say, well, what the heck am I doing here? What are any of us doing? And those are the people that are really easy to onboard, and really talk about like real business use case. Like that's the other group of people, are the people who were told to do Ethereum or some other blockchain because they had a business idea that a blockchain could help. And they've spent 6 months trying to do a thing. And they're like, well, I don't know. I just can't deal with variable fees. If I can't know how much my transaction is going to cost next week, then it just doesn't work for me. And so a statistic here on BSV, which is the most scalable blockchain, is 99% of our transactions are done by apps that left Ethereum. And so anybody that actually had a real business that really wanted people to use their thing and generate volume, well, they've all left. They come to us and they're like, oh, thank God you exist, because I actually wanted people to be able to make payments to each other or sell each other some token or transfer identity in some way, or make a trustless handshake to facilitate some other more complex trade or whatever. And that's been great. And so that's where we're seeing the most inroads, are people that aren't scammers and people that don't immediately just think of it as a financial asset. Those people love it, and that's great. That makes me happy.
Yeah, I've run up against, and I think you've seen this on my Twitter, up against the religious cult that espouses a specific crypto, whatever it is, and just sort of hammers you into submission. And I would tell people, if that's what you're getting, stay away from those people and potentially those cryptocurrencies, or at least, use your discernment. When you get into any financial asset and somebody's trying to pound it at you, it's a pretty good sign that they need you to make that work, and it may not have intrinsic value that you're going to find. I want to turn the conversation real quick to the stable coins. We know Luna has just blown up, and I think Tether is coming under pressure. I have a gentleman on my show, Karen Bunhest, who comes and talks about Tether all the time. He's very active on Twitter, and their lack of backing, and specifically with Tether, they were investigated, I think, by the New York State Attorney General, and had to pay a big fine, like $2 billion, just to get them to stop investigating, going deeper. That's always a bad sign. So about the stable coins, they're not all made the same, but can you talk in general about what the stable coins are and why are some of them really having issues right now?
Sure. Well, there's two basic kinds of stable coins. There is the one-to-one asset based on collateral. So this is what Tether alleges to be, kind of. Presumably, the way that it should work, let's just say the way that it should work is, you give me $50, I put it in a bank account that is publicly audited, and I issue 50 $1 tokens of Tether. This should be their business model. What it's become is they give me $1, I issue $5,000, and I collateralize it against a bunch of unsecured corporate debt, maybe some other crypto, some random, real estate, like whatever else. So they work like a sort of a central bank issuing money, except with none of the protections and and no audits and a whole bunch of stuff. So that's your one kind. So a collateralized stable coin. I think a much better example is the USDC coin, which is issued by Circle, which is a subsidiary of Goldman Sachs, who is, again, a group of people that I don't particularly like, but at the very least, they are a US audited financial institution.
Right.
And they go through audits of the USDC collateral supply and other stuff. So I think it's a much safer thing there. And then the other one is the algorithmic pegged stablecoin. And this one is a little weird for people that don't understand derivatives markets and how derivative assets work. But the way that it works is, there's a concept in the blockchain space, a smart contract called an automated market maker. And what it does is it figures out how much supply side and sell side, or buy and sell, there is on any asset. And it tries to simulate what a person would do who was a market maker on an exchange. And so in order to hold a specific price, that's what you do. If supply goes up, you burn it. If supply goes down, you print it, and you try to hold the peg using a series of complex algorithms. That's what UST is. That is the UST stablecoin from the Luna Terra, or Terra Luna rather, ecosystem, issued by a Korean dude named 𝙁𝙁𝙁𝙁, who's kind of a prick. If you've had any interaction with him. Basically telling everyone they're idiots. If you don't understand algorithmic stable coins, it's because you're a fool. And
that's always a great way to sell something, is to tell your constituents and your potential buyers that you're all just stupid and I know better.
Right. Yeah. If you have questions, it's because you're an idiot. So buy from me. So, and and it's funny. So people were calling him out and saying, how is this not a Ponzi scheme, basically? And so what they did is they had their Terra token, which would be printed as sort of an inflationary asset that could be printed at will in order to hold up the price if necessary. And then the company or the DAO or whatever they had set up, whatever legal entity they had, also owned a lot of BTC Bitcoin. I think they had like 80,000 coins on the books in order to be able to just balanced out that trade in order to hold UST at $1. Now, what happened is it looks like there's some real weird stuff going on with BlackRock and Citadel, that they took a big investment into a competitor, and then it looks like they may have just figured out the algorithm and made some predatory trades in order to first break the peg and then beat the peg down to essentially nothing. So UST completely collapsed, and then the Ponzi aspect of it, which was the Terra Luna token situation, fell apart too, because markets got spooked and then people started to sell, and just everything cascaded the wrong direction at once. And then the curious thing is it looks like they also sold their 80,000 BTC in order to try to save it and bring all the pegs back, and that failed too. So this 𝙂𝙊𝙇𝙍 guy, who was a multi-billionaire 2 weeks ago, looks like he's probably lost everything that he didn't cash out before this all happened. But it's been a real rough week for algorithmic stablecoins, and they're not the only one like that. There's a few of those out there too, and what it indicates is there's not enough liquidity to hold this stuff up. Now, mentioning Tether claims to be the stablest of stablecoins, but the problem is that while they claim to be that collateral backed thing, I think they're probably doing a similar thing in the background anyways, because how do you make money on just issuing one-to-one coins? Like, you can't really do that. So you have to treat it like a bank would, but they've got no audits and no anything else going on. And we're starting to see, I mean, it's depegged a little bit a couple times now. All of a sudden we're seeing a large redemption on Tether, which we haven't seen in years, frankly. The supply going down of circulating tethers means very large players are saying, hey, Tether Corporation, give me my dollars back. Here's billions of these Tether tokens. I want my money. And so I don't know how long that happens. And it depends how thin the fractional reserve is on cash versus Tether in Tether's accounts. But I can't imagine they could absorb. They certainly can't absorb billions a week, but I guess we'll see what happens if all of a sudden there's no more dollars to give to the people that are saying cash out my tethers. So I don't know. It's very scary.
For basically like a bank run in Tether. Essentially, people are going to the window demanding their money.
Yep.
And we'll see, how much they have. When Kieran comes on, he talks about, and other people talk about this too, to be fair to Kieran, a lot of people suppose that if the stable coins go down or certain ones go down, it could affect the rest of the crypto market. And I think
for sure.
I think there are a couple of aspects of that. There's how much cross-pollination there is between, the different types of coins and that type of thing. What is your view on that? How stable is Bitcoin SV, or anything else when you have these type of confidence failures in some of these algorithmic stable coins or stable coins that aren't as liquid as they purport to be?
Sure. Frankly, we don't know, actually. Because again, a lot of the exchanges, and even the exchanges with most of the liquidity, are a lot of them are not audited. We don't know how much Bitcoin they have on the books. We don't know, there's just so many things where it's like, does anybody have these assets? So it's paper Bitcoin traded against paper Tether, traded against maybe non-existent reserves, and
That's right.
I think it's much more dangerous than basically a 1928 bank in New York City, because at the very least, there was some decency among these people to have some hard assets. And I think a run could happen really at any moment. Now, the interesting thing is all the people that are holding their coins off exchanges. And there is actually a significant number of people. They tend to be the old school people, not your modern trader types. Your modern investors and traders have a tendency to just hand their coins over, or they've got them in Celsius or BlockFi or some of these other things where, hey, you hold my coins and I earn 8% interest or something. So there's a lot of that too, which is just another big derivatives trap. And I don't know. So I don't know what happens if all of a sudden too many people are trying to redeem BTC for Tether, BTC for whatever, stablecoin X, at the same time that, the market has been in a bear for many months now. So I think we'll start to see some of those other ones, your Celsius or your BlockFi. I think we'll see one of those will have a big event where some large group is, hey, you know what? I've made a lot of money. Give me my $3 billion, please. And all of a sudden that's a we're gonna need 2 weeks, and then it's gonna become 3, and then all of a sudden it's gonna start to really piss some people off, and then you get one of those, and it just, the dominoes start to go. And so
Yeah.
I think we'll see, but I am not confident at all that these things, first of all, weren't intended to be a store of value. I think the store of value narrative is nonsense. And so if it ends up doing that, I don't know that any of them, basically nobody's safe. Like, I don't know where people should keep their money right now, because I'm not bullish on really any of the rest of the economy either. But the crypto economy might be, I don't know, it might be among the worst, but it's hard to know. There's just a lot of scammers living on a lot of fake money all over the world. So it's a weird time.
When you say you're not sure where to put your value, are you talking specifically the stable coins, or do you have fears about putting it into, the main cryptos like Bitcoin?
Yeah, I mean, holding, BTC or ETH or any of these things are, I mean, because what are they denominated against? Like, they're denominated against, it's been more than 90% of all trading and volume has been against these stable coins for at least 5 years now. It's been over 90% since 2017.
Wow.
And so if a stable coin collapses, well, what even happens at that point? Like, it's whose books are even being traded right now. It's just, they're all IOUs on these exchanges too. And so a lot of coins are sitting at weird custodial companies whose names you don't even know. And if it's all going to fall apart, are they going to redeem you out? Like, most of them aren't even regulated. A lot of them are sitting in weird bank accounts in weird countries. And if the whole world's going to collapse, I'm not super bullish on being able to send have my lawyer send a letter to a bank in Kazakhstan to get my stuff back. And so it's, I don't know.
Do you think the crypto complex is in some ways another version of the banking complex, but maybe done by more independent actors versus the traditional Goldman Sachs of the world?
It's a mix. I actually think it's a lot of guys that are from Goldman Sachs and other serious institutions that are moonlighting as these crypto geniuses. Like the people that are setting up these weird shell companies that do the derivatives trading and the custodial stuff. Like, these are not fools. And the people that learn this stuff learn it by working at the London Stock Exchange or the Chicago Board of Trade or NASDAQ. Like, the people that are really good at this stuff are, they're not just going to show up one day and say, oh, I'm 23 years old and I'm going to just create a bunch of stuff for crypto that looks like this. Like, no, these are people that work at Goldman and other places and say, oh, hey, now I'm Super Dude 69 and that's my screen name and that's all anybody's ever going to know about me. But here's this extremely complicated financial vehicle that you can plug a bunch of Bitcoin into. Like, that's what's going on. And actually, I just heard, who did the SEC raided somebody in New York this morning and took away like 1,000 burner phones from people for insider trading. And so that's exactly what I mean. Like, these are people, I think, sitting in New York City working their desk job. And then they've got their tablet over here where they're on Bitfinex and they're they're doing the same thing. Because why wouldn't you? Who are the professional traders? Obviously, it's going to be a lot of cross section among those people.
So, do you think you mentioned cryptos, and I'm generalizing what you said, not being a store of value? Do you think Bitcoin SV could be a store of value if we have like a global liquidity type of event?
Maybe, and it's a weird reason why, and the reason is that BSV has underperformed the crypto markets for 2 years now, and so I'm kind of at a point where everybody that was actually going to sell it has sold it, and if the derivative stuff collapses and really pops the bubble, we're not really involved in the derivative bubble. Like, we're already, people who have BSV have it because they care about it, or because they've built a business that requires it. And I think that's our one saving grace, is that just like anything, like what are people actually going to do? What did people do in 1928 through 1930 when the entire economy collapsed? It was like, well, I did have this office job for the last 6 years, but before that, I was a pretty good farmer. I guess we're going to move the family to Kansas and we're going to see if we can farm, And so people do actually retreat to utility when bubbles actually really completely burst. And so if you have a business that really requires the technology, all of a sudden, all your speculative stuff is dead. And you say, well, I still have BSV that could actually build me a business that allows me to do all these other things. And so that's my not investment advice, but it is my sliver of hope that maybe some sanity will prevail once all the fake money has been sucked out of that economy, is for people to say, okay, everything I ever learned about Bitcoin or blockchains in general does actually apply to this blockchain. And so maybe there's hope there. And maybe there is this utopia that I thought we were building on Polygon or Solana or Avalanche or any of these other things. And maybe this is a real option. And so that's my maybe weird, hopeful hope sort of thing. But it is true. Like, or maybe everybody decides this was all nonsense, and the tech bubble has actually been bursting for years, and we don't actually need social media, and we don't actually need any of this stuff. Like, it really depends how bad the real global bubble bursts. Because at some point, maybe we're all back to hunter-gatherer lifestyle in 50 years too. Like we just don't know.
Right.
So yeah.
Interesting. So you travel all around the world. I've asked a bunch of questions. Last one, I'm going to leave open to you. What are some of the things that you're saying that we haven't discussed here with regards to, what you do every day and what you cover over at CoinGeek?
So what I do as a rule is I like to talk about Bitcoin's history, because I think most of it is unknown. By design, every time there's a bubble, most people in Bitcoin are new. So they don't know what happened 3 years ago or 5 years ago or 10 years ago. And so I like to tell those stories. I like for people to know that, hey, did you know, everybody tells you Bitcoin is immutable, but did you know it's been rolled back twice? Let me explain to you the times that it was rolled back. So in 2010, it was rolled back because of this. And in 2013, it was rolled back because of that. And you should know that that's a thing that could happen. And everybody looks at me, they're like, oh my God, that can't be true, and and so I love basically letting people know that, hey, this is possible. And so that's one of the major things I do. I also do a lot of Q&A sessions. So I am very comfortable standing in front of a room of 100 people, or taking a live, I do a weekly live stream that has an open Q&A box. And I'll take the hard questions. I don't care what they are. If it's Bitcoin related, I'm very comfortable to talk about all of it. And I also like to cover what I think are essentially these scams, and they're the things that people are excited about, but I believe they are going to collapse. I believe they are going to slow the adoption of the actually disruptive technology that I care about. And ultimately, I want people to build really interesting businesses. I am an entrepreneur first. I am not a investment guru. You'll never see me tell anybody to buy BSV or buy anything else. I let people know that, hey, if you need reduced payment friction or increased data integrity, here's the best tool for that and why. And so that's what I like to cover. That's what I like people to think about. And I think when the bottom falls out of a lot of these markets, you're going to really wish you looked into how you can actually earn money in ways that aren't sitting and holding assets that are just, absorbing value, basically. So that's it for me.
Awesome. Thank you so much, Kurt. I love having you on the program because you seem to be very moderate in terms of understanding the pros and cons, the challenges, the developments that I don't get out of the crypto space, especially in social media. I get attacked all the time because I'm quote unquote the gold guy. I don't think they understand that I do understand technology, and I just like to live within the space and absorb it and learn it. And you make that possible. So that's why I'd like to bring you on for our guests. Appreciate it very much. I'd like to have you back on in the future if you'd like to join
absolutely.
us.
I'm always happy to come on and talk.
Well, thank you so much. Good luck on your trips. I know you got a bunch of them coming up, and appreciate you stopping by.
Yes, sir. Thanks.